As we wrap up, guys, get ready for it. For the S&P 500, the worst first half of the year since 1970. We're going to talk a little bit today about some stocks that may never see the highs ever again. Are these, in fact, going to be dead forever, guys? Not a good quarter. Heck, not a good first half of 2022. If you're in any of these, you might want to reconsider.
Okay, so I'm going to start with one, and don't at me, Kathy Wood. But Roku.
She won't.
No, she won't. And I've said this a couple of times, and maybe not out loud on the show. I'm going to zoom out so you can see. Is it saying much that the stock is not going to see 490 again, the double top? I mean, it's at $80. That's probably not that crazy of a call. But the other thing to think about here is when I start thinking about innovative companies and ask myself, like, what's their model for 10 years from now? And I start thinking about Roku's product. It's like, what are they doing that is so great? Like, I get it right now. You have a lot of people not adapting to smart TVs, and it is what it is, and everyone's going to be able to stream from just about anything. But I just don't see what it is about what they're doing that is going to be a big time winner that just can't be destroyed by a lot of bigger players. It doesn't make sense to me on a fundamental level. And on top of that, think about this: the stock has gone from $4.90 to $80 right now. That big of a drop, and you want to tell me they're almost triple digits PE? What? Like, that doesn't even make any sense. So, like, what would you don't even waste your time with the napkin math to what it would take for them to be back at $500. It's utter nonsense. And that doesn't mean the stock couldn't go up from here, because the short term, there are some interesting things that they are doing. Like, don't get me wrong, being able to purchase from advertising, that's a good thing for them. In the short term, you would have heard me say there's going to be a trade if we get a market rally here. It holds a 50 period. Because you can get like 90s to 100s, and a relief rally might take you to a 140 or a 150. I get that. You've definitely come far enough. When something's come down this far, you can see those types of rallies. That's definitely potential there. But that's nowhere near getting to 490. That's nowhere near to being a company that's going to be a leader in 15 years from now. So Roku, that's the one for me. There's a lot that I could have picked. I wanted to say Lemonade. I decided to go with Roku because I feel like it was just a more interesting name.
I didn't want to pick a Kathy Wood name, but there's so many there. Like we talked about before, Upstart was $4.80. Now it's $30. I mean, you're not going to get back to 500 in any of those names as well. But I'm going to do a little name that is a little more, I mean, just like Neil's there. People have heard about these companies, and I feel like the one that I'm going to choose for you is going to be a fail. And I feel like they've definitely missed the first mover advantage. They've definitely missed out on their opportunity to become king of the plant-based meat department, and that's going to be Beyond Meat right now. Because honestly, like, this name, if you just look at what's happened to it, it's just straight to the. It's not even like it had any of those like major wick moves. I mean, there was. I'm not going to talk about like what happened when it IPO'd. I mean, you're going to see some crazy spikes happening here. 198, so on and so forth here. Big moves. There it is right here, 250. I'm discounting these highs. I don't even care about these highs. I'm just talking about, like, you're not even going to get back to January highs. I don't even think you're getting back to $100 on this name, right? Why Tesla continues to work is because they execute properly. They are the first mover in the EV space. Everybody loves Tesla. And honestly, like, once people own their cars, they really don't ever think about driving a combustible engine again. Now, maybe that's not the case, but here we go for Beyond Meat. Now, I see it all the time. People aren't happy with the taste of Beyond Meat. People aren't happy with the way Beyond Meat uses too much estrogen. They're not happy with the fact that, the quality of the product, some of the beef jerky that they released, some of the fish, it's just, I feel like they've lost their way a little bit here. They are 85% down off of its 52-week high, okay? And the big thing about the first mover advantage is, to be completely honest with you, they've blown that because now you have many more entrants that have come in. You have the Impossible Burger. They've also been one of the first people to have deals with KFC, deals with McDonald's, Burger King, everything like that, and their stock is still all the way down. So if competition's in now, they don't really have first mover advantage because now people are making their own burgers, they're creating all this other stuff, and they're kind of forgetting about Beyond Meat. They're even having to discount their food. So they discounted 12% and revenues dropped 10%. So what? There's only a little small 2% there. I don't feel like they're getting back, and that my call for a stock that I wouldn't. Again, this is not to say that you can't invest at these levels. I'm just saying I don't believe you're getting anywhere back. And this is 2021. 2021 year, May of 2021, $100. You also saw it right here again back in November. So I feel like Beyond Meat is one of those names that we don't even get back even close to their high.
It's a very good point you make in that these are not necessarily stocks you shouldn't invest in because they could potentially be a good trade, a good swing trade even over a couple of weeks or months. But will they ever see their highs again? Guys, I'm going to pick on Netflix because that might be low-hanging fruit to some, but this is 701 was the high at the very high anyways. This is the weekly chart of Netflix. This stock is broken entirely below 200, below 180 even now, and is never going back to its high, even if we get the advertising model, even if they figure out this 4 or 5 different login problem on the same account, this stock is not going back to its highs. This is a broken stock that is going to continue to the downside. 17 PE right now for Netflix. I, for the first time this month, in fact, started to question why I am still paying for Netflix because I don't watch any of the shows that are on Netflix. Maybe if they start to get into sports broadcasting or something live, might be a little more attractive. But anyways, there's our take on a few stocks, guys, that are never seeing their highs again.